welcome to the World Battery Metals and Mining News for the 13th-15th of September 2024.
Zambian copper mines, desperate for power, find an unlikely savior. Zambia's mining industry, heavily reliant on hydropower, is grappling with a severe energy crisis due to an historic drought diminishing its primary power source. With household power limited to just 3 hours a day and the nation's largest reservoir, Kariba, nearing a complete shutdown, mining giants like First Quantum Minerals are turning to South Africa's Eskom for electricity. This imported power is crucial to maintaining operations, particularly as the crisis worsens and the only coal-fired plant in Zambia undergoes maintenance. New government regulations now allow mine operators to source power from alternative suppliers like Africa Green Co., somewhat alleviating the immediate shortfall. However, despite upcoming seasonal rains and a new gas-fired power plant in Mozambique, expected to boost regional capacity by 2025, Zambia will likely continue to face significant energy deficits through 2024, potentially stifling economic growth further. Ghana anxious lithium price slump will derail maiden project. Ghana's pioneering lithium mining project, initiated by Atlantic Lithium, is under threat due to falling global lithium prices and bureaucratic delays. The project in Iwoya, intended to produce 360,000 tons of lithium annually, received environmental green light yet faces construction holdups awaiting parliamentary lease ratification. The fluctuating lithium market, caused by oversupply and shifting EV demand, positions the project's profitability on shaky ground, with production costs at $650 per ton, barely above current market prices. Speed is vital not only to capitalize on lithium demand, but to maintain investor confidence amidst global competition and emerging alternatives. Bureaucratic indecision, reflecting past gold project missteps, could further delay Iwoya's progress until 2025, risking investor withdrawal. Metals-rich Kazakhstan seeks niche in battery supply chain. Kazakhstan is strategically enhancing its production of critical metals essential for electric vehicle batteries by issuing numerous new exploration licenses to attract investment. Positioned as a dependable supplier amid global tensions, particularly with Russia and China's tightening grip on rare earths, Kazakhstan is leveraging its vast mineral wealth. The country aims to expand its footprint in lithium, cobalt, manganese, nickel, and graphite markets, already holding significant positions in manganese and phosphates production. Industry Minister Kanat Sharlapayev emphasized Kazakhstan's long-standing reliability and outlined plans to scale up the processing of battery-grade metals. The streamlined licensing process has boosted exploration activities, attracting major mining firms like BHP and Rio Tinto. Notably, despite its ties to Russian-led economic alliances, Kazakhstan has adopted a neutral stance on the Russia-Ukraine conflict and is complying with Western sanctions, indicating a balanced geopolitical maneuver. TSX hits record high as precious metals boom. Canada's primary stock index hit a new record high on Thursday, driven by a surge in precious metal prices that boosted mining stocks. The Toronto Stock Exchange's benchmark rose 1.1%, breaking its prior peak as gold prices climbed 1.85% and silver shot up 4.42%. Investors finally seem to be catching on to the potent rally in gold and silver, pushing the materials sector up by 4.1%. This rally has been turbocharged by expectations of an interest rate cut from the U.S. Federal Reserve. In addition to precious metals, copper and aluminum futures saw gains attributed to robust demand signals from China, while iron ore futures edged higher due to improved seasonal demand expectations in China. Every sector on the TSX ended the day higher, showcasing a broad market rally. Notably, Hammond Power Solutions topped the recently released TSX 30 list, exemplifying stellar 3-year growth with a 928% increase in dividend-adjusted share price, reflecting a robust run in electric grid infrastructure. While the materials sector's performance certainly energizes the TSX, this rise also attests to investors' growing confidence in a stable economic outcome for the U.S. MTM changing recycling status quo with e-waste gold recovery. MTM Critical Metals has pioneered a game-changing method to recover gold from e-waste using their proprietary flash joule heating (FJH) technology, reaching up to 70% efficiency without toxic acids. This innovative process heats e-waste in a chlorine gas atmosphere to vaporize and separate metals, offering a scalable and environmentally friendly alternative to traditional smelting and leaching. CEO Michael Walsh emphasizes the economic and ecological potential of this method as global e-waste and demand for greener metal production rise. Given the immense value of recoverable content in e-waste, MTM's approach could significantly mitigate environmental harm and reclaim valuable materials. Their recent announcement buoyed their stock price by over 30%, and the company plans further tests to enhance scalability and efficiency, especially for critical metals like lithium. Ongoing collaborations aim to support the broader development and adoption of this promising technology. B2Gold raises cost estimate for Goose project in Nunavut by 23%. B2Gold is facing a 23% cost increase for its Goose mine project in Nunavut, now estimated at $1.13 billion due to a 3-month production delay and accelerated capital expenses. Despite the setbacks, the company remains on course to start gold production in mid-2025, targeting an annual yield of 310,000 ounces for the first 5 years. Concurrently, B2Gold reported resolving issues with Mali's government regarding its Fekola mine, which will continue under the favorable 2012 mining code, ensuring operational stability until 2040. This stability bodes well for their expansion plans, potentially adding 80,000 to 100,000 ounces of annual gold output from regional projects by 2025. While the Goose project's cost hike isn't ideal, the Fekola resolution is a strategic win, reflecting B2Gold's adept navigation of regulatory landscapes amid shifting government dynamics. Shares responded positively, rising 4% in Toronto. Australia's $1.8 billion market cap. Westgold joins TSX. Westgold Resources has simultaneously listed on both the Toronto Stock Exchange and the Australian Securities Exchange following its acquisition of Canada's Karora Resources. The company, which now has a market cap of $1.8 billion and is among Australia's top 5 producers, expects an annual output exceeding 400,000 ounces of gold. It's remarkable how this dual listing broadens their investor base, tapping into shareholders who are fundamentally engaged in gold. The acquisition integrated high-performing mines like Beta Hunt and Higginsville, expanding their reserves to 3.2 million ounces and giving them robust exploration opportunities. Despite their shares dropping slightly, Westgold is positioned for aggressive growth, particularly with gold prices surging to historic highs. Their strategic expansion, backed by solid cash flow and significant ore reserves, places them in a strong position to scale up operations and production efficiently. Achieving this, while maintaining an environmental stewardship in mining, could indeed set a new benchmark.